the risk, what called the riskability means that the risk of doing a trade. Ultra is much more riskier than options. Options you screw up your thinking or your risk management, your thing as well. But ultra trading is Chinese here. In the world trading obviously king ha king chiu, fast hand fast leg. You cannot think. If you can misfire using options you are going to misfire more fiercer with using ultra. Ultra formal trading is what by nature is what I call intraday, intra-hour. In some cases, if you're lucky, overnight. Overnight trade means that last 5-8 hours, every hour is making you high. Wow, I might make good money. I decided because I make so much money now, I decided to hold the trade overnight by putting a trading stop loss. Notice the trading stop loss word I never use for options. It's only because mother share, because there is no what we call option there's no price volatility. Means that remember by understand price volatility. A price volatility I'm referring to now is referring to what? Is referring to the bid ask spread difference. Because options have sometimes abnormal option premium volatility, the bid ask spread fluctuate, but shares don't know. Shares are not, if a good shares you trade no such thing. The bid price is $255, the ask price is $245. Options can no, but shares impossible. Unless you trade something weird exotic stuff or you like crude oil crisis once in a lifetime. I never see one buy must sell for credit kind of thing. So this type of trading, if I go extreme, this kind is considered ultra trading. Looking at multiple charts. But in my world of trading, if you do this, either I congratulate you, I will scold, or I scold you. Depends your skill set. Most of the time I tell you focus. Most of the time I focus at best 3 companies only for you, 3 underlines. Okay? So ultra trading by nature itself is supposed to be fast. Is what we call by nature itself is fast in, fast out. I should make sure I trade here. You can see look carefully. What time open? This type of trading is you can see that open open what time? Open at what time is 12:39. Close at how much? 12:58. You know how much money I lose or not? A lot. So, but it's still considered ultra trading because in terms of trading, ultra trading is belong to day trading. So it's a good idea that must be careful. Like here, like that, here, like here, and I trade like that. Later the same night, I do what? I based on market I go and buy an option here. Can you see I buy an option here. I buy a put option here. What time I buy? 9:01. Okay, look carefully. I sell the option what time? I buy what? I buy option what time? 9 o'clock, right? What time I close? That is also considered ultra trading. Ultra trading by nature itself fast aggressive futures. Because if you tell me slow and steady, do you think I can make money in 2-3 hours? No unless you go and trade Amazon or Google every day move $50 a day and you target $5-10 that can be done. But unless the thing is a super mover of $50 a day, you are not going to make money out of it. Okay? So here I make money. This time I make money. See, I buy how much I can buy? I buy $84.50. I sell at $125. To the world of trading, you must be sensitive. So when I will teach you how to trade futures, shares, spot, CFDs, options last. Because options is not, if you are skillful, good. If you are starting off, bad. Because if you use wrongly, slippage will kill you. You understand me? You trade option before, correct? Vertical spread, you can see a fluctuate between 120 go to 150, 150 go to 90 cents, then go to 80 cents, go to 180 again. That is called option premium fluctuation. If you do it too fast, you don't know what you're doing, you end up maybe end up buying at 150, selling at 90. And you can be still right in directionality. So look carefully. For day trading, it's best to have stocks and shares 30,000, futures 40,000. Of course, you can use CFDs and spot forex. Spot forex and CFDs are primarily by itself is actually is private instruments, so that's the reason why they give you high leverage. Example, like CFD for index 20 times leverage, and they let you do 10 units. A standard e-mini contract is 50 units, and it will cost you $13,000 margin requirement. But if you trade with CFD broker, the broker may give 50 times leverage and 20 times leverage, and let you trade as low as 10 units. So everyone got pro and cons. Spot forex, you want to trade currencies. Most of the time, most of the brokers now trade 50 times leverage. If I go and trade futures, you won't get 50 times leverage. Futures and one, okay, not only leverage is one thing, another thing most important between futures and spots and CFDs is the spot and CFD let you trade non-standard size. Means that you want to trade 18, you want to buy, my lucky number is 13, so I buy every time I trade, I will do day trade 13 shares of Tesla, 13 shares of Google. You can do that, but you can do that because it's called variable numbers. But if you trade futures, one contract of gold futures is 100. No matter how it is 100. Even you go to mini size there you fixed size one. Okay, answer saying so far now. Okay, so the question is, go back to you. You must be sensitive to what you're doing. Everything you trade, you do like Thomas. You don't want to trade what you want. You don't trade what you want. You trade what you can afford based on your risk budget. Be up for your plan. That's why all you should do have done the one up already. Of course, if you got 30-40k or 30-40k USD, you have one called all in one account. You can trade options, you can trade shares, you can trade futures. And the best part, you can cross portfolize it. Like example, you sell a call, you need to pay premium, okay? But you got shares inside, then you can use you can cross means you can use other position to hedge one position, another position. So when you sell a nickel call by itself, it will cost you a lot of margin, correct? But you got shares inside here, correct? As an informed investment, correct? Then your margin requirement becomes zero because why your shares. It's what they call cross margining. Not all brokers do that, but TD Ameritrade and Interactive Broker do that. Any questions? Like here, like that. Look carefully here. Now this is the hunter style trading. Okay, you can see on top. Wow, trade futures here. Wow, lose a lot of money. Then here we trade shares here. Even lucky best. Trade 1,000 shares. Enter midnight, 8 midnight. Get out at 1 a.m. in the morning. Make $1.24. But what's the problem? The problem is that I trade 1,000 shares at $344. So how many of you can 4 times leverage? You're looking about about 75 to 80, $80,000 margin requirement, 4 times leverage. So yeah, 344 times 1,000 shares is 344 divided by 4 times should be around $75,000, $80,000 margin required for TD Ameritrade. Provided you are in good books, if you are so-called, if you're blacklisted, then the margin, TD Ameritrade may not give you margin. The margin requirement, the margin given to you by TD Ameritrade 2 times, 4 times is subjected to TD Ameritrade. Happy to do you. If you give them problem consistently, over like one of my students to mention name, every time trade until account got suspended. You know who we're talking about, okay? Trade until account got suspended. Okay? Why? If the account size too small, but you do day trading too many. So now here is what all these are day trading. Enter at 12:08, get out at 1:13. This one also day trading. This one straight call, straight put. Enter at 11:20, get out 11:32, 11:33. Also can. This one will cost you more money because this one cost you $11,000, $11.30, so it's about $1,130 to do a trade. Okay? So these are day trading. Can do lah? Yes, can do. But for now, we focus on getting comfortable to do short-term trades. Whether you do shares, futures, options, we can discuss it. We can discuss our sports or CFDs. We can discuss it later on. Remember now we're focusing, like our friend down there, we're talking about focusing the style of trading. The underlying how to trade, what to trade, we can discuss later. This is a standard portfolio. This is in the world of real world trading. This one you see down here is actually referring to what? This is actually referring to a swing side. And the one just showed out of 30K, you put $10,000 cash or $5,000 cash. Then $10,000 for day trading. Another $10,000 for swing trading. Swing trading referring to over here. This is by nature itself your so-called your main call. Day trading is opportunist by nature at best. So now we're talking about hunter, fisherman, farmer. You learn to be fisherman, correct? Fisherman. Yeah, our friend here have learned to be fisherman and farmer already. So now learn hunter. Hunter, because the nature of itself is different, because hunter itself, what we call is aggressive. It's aggressive, fast, directional. You must be there to trade. No such thing automatic trading. No such thing as, okay lah, today I don't get a few, I'll feel 1 hour, I will queue for the better price. No. Day trading, intra-hour trading, scalping, must fast in, fast out. You can't delay one. Like here, like that. Look at this trade. This is the whole segmentation beginning of last year. You can see E-minis a combination of what trade? Intraday trade. You can see okay, buy one here, sell here. What's up? Buy at 5:34 p.m. 11:06. Sell to take profit. Buy 48. Take profit at 58. Then take profit at 56. Take profit at here. Cut loss. See can you see the timing lah? So it's called day trading. While we enter a trade, there must be a breakout or momentum or some sort of trend. Yeah, so these are day trading. Future trading is one of the better forms because if instead of using futures, you can use CFDs. Like some like here, you any problem with CFDs, you ask for which broker, you can chit chat with NG. You do 10 units. The problem with E-mini is what? Minimum 50 units. Now it's $13,000 margin requirement. This is ultra trading, okay? In the finance, how you know ultra trading? Enter what time?
9:54.
Get out what time?
11:44.
You think what? Trend trading, momentum trading. This one is sniper. You notice his trade what day? How many days? Expiry night. Means what? Friday night the best to trade.
Yeah. Today Friday lah.
So whether you use options or shares, one option trade is considered one pattern day trading. Shares also the same. Options on shares also the same. Okay, options on indexes for day trading also you buy. Okay, what is day trading? Is open and close is considered trade. If open a trade and overflow expire in the money, that is not considered day trading. Any questions so far?
Then option for futures is that also considered?
Options, futures is what?
Future
Is different really.
Yeah.
Unlimited trading really. So option on futures also unlimited. Of course, options on futures is much harder to do than option on shares because of its lower liquidity. More importantly, the underlying itself got problem. Means that not easy to do. Here another one. Is this scalping trade? No. This one 2 days. So all these are swing fisherman trades. Fisherman trade means what? Do not need you to be there. You can leave it for a few days, few hours, whatever, so you can make money of it. Of course, this is passive style lah. This is called hunter trades. You can see here the style. Buy in what time? Buy options at 4:55 p.m. Hey Thomas, Singapore time and American time is different. How is the way hour? 4:55 p.m. is Greece timing. Plus 5 more hours. Singapore is plus 5 hours. So in America it's 9:55 a.m. or 9:55 p.m. Singapore. Okay? Now 9:55 p.m. now. You see enter a trade, buy here. Take profit $4. Take profit 555. That is considered day trading. Okay, if you got 25, 30K, you got 25 cash or 26,000 cash, it's perfectly safe. You can do as many as you want. Okay, if your account size is 10,000, 7,000 or 14,000, then you must like the poor gorilla sniper, 3 shots only must aim properly. Okay. I enter here, I enter I enter again, I take profit again. Second round take profit not as good make 90 cents only. So this type of trading can be done using a smartphone if you know what you're doing. In fact, for future trading, in fact easier to use smartphone than you think. I ever go for a birthday dinner on see a thing, enter a trade and go back dinner, make $6,000, okay? Finish the dinner, I sponsor a birthday dinner, come back, make $6,000 Thomas, if I know you make so much money, I should order the super deluxe, don't know 12-head abalone. So, this is being your skills. Once you got skills, you can go in, go out, make good what you call tactical decision. Then you can adjust to choose your underlying. This type of trading is what trading it's not thinking ability trading, expecting it. It's not confirmation, it's not option trading. This type of trading is called price action trading. We are trading price. We are not going to analyze the last 5 days, 10 days, 20 days candlesticks. Because why? Why should we analyze last 30 days candlesticks? We trade only 5 hours, 10 hours. You need to analyze the last 30 days. Don't need. Okay? Okay? And then of course you want to hold for 5 days, 10 days, then you may want to analyze last 30 days. Our friend here do before but this one is not ultra trading. This one is what he's trading what we call the market noise. He trading the market momentum, price action volatility. You can see by the way, technically speaking, not all day trading are what we call ultra trading. In order to qualify ultra trading, that means what you intend to hold a trade for very short term based on price action value, based on scalping opportunity, based on breakout. This one is more like a trend trading. You can see all the trades are bearish. You can see buy one, take profit next day. You can see in about 4 days, take 4 different trades. This is not ultra trading. Because it's just trading the momentum. Okay? Yes, one key trader is ultra trading is actually shortness of time. But it doesn't mean all of them are. Okay? Do me a favor. Don't tell me this rule. Oh, Thomas, I put in 500, I must make 1,500. This 3-to-1 ratio for every $1 I lose, I'm gonna make $3 or $4 or $5. Please, you got this mindset. Do me a favor. Take this mindset and go inside toilet bowl and flush this thinking away. Respect the market. If the market is showing 15 pips, you want to prepare to lose 10 pips, then you must make 30 pips. But the biggest move is 15 pips. Do you think what is the chances for you to make 30 pips? Not possible. Lower probabilities. Correct. Because let's say 15 pips and you target 3 pips. Not quite easier because you are trading within the momentum of the big candle. You're not trying to gay kiang, no. Okay, breakout bar, that exponential draw 3 times up, whatever is that is not going to work. Ultra trading by nature itself, most time it's open risk. So if you do open risk trading, therefore your position sizing, your quantity sizing is very important. I trade here like that. This real trade. I lost a nice chunk of money. Take a look. Okay, I enter midnight. Next morning hold for 12 hours. I buy 3174. I hold for 12 hours. I sell 309. I lose 110 points. One contract is 50 units, so I lose 5,005. How many contracts? Don't ask me. If you need to ask me, I don't need to wow you. Recently, I just post one day trading inside, 41K loss. This one, 12 hours only. Next day, same day, I just teach you all. Instead of buying a futures, I go buy options. This is not ultra trading. The entry part is ultra. But the continuation trade is not ultra. Actually, I said since I know it's going down, so what I can do, I buy a straight put for $384.50. I cash out at 115 cash out at what price? At I cash out at $107. So I make $22.50. Okay? So I'm just showing to you, it's not that I must use shares and things like that. So as long as you know what you're doing, you can use any instrument to trade. And here like that, okay, never mind, this one an option, don't worry. For ultra trading, we are following what? We are following two things: price action volatility and chart underlying price flow. Option premium volatility, we don't use. This one, 100% based on chart. When we do ultra trading, we always based on chart patterns. Price action value defect. Okay, now this is a what? It's how you know some of it. Fundamental, technical analysis, price action, quantitative option analysis. When you do ultra trading, it's always based on price action. We look for nice breakout move. We look for big move, or we have a what we call a nice breakout momentum. Break a 10 days high with some strength and things like that. Afterwards, I will show you some real life example. Okay. Afterwards, I will run through all the futures equivalent or sub equivalent